Hey, what's going on, everyone? Good morning or afternoon, wherever you're at. I'm gonna do a review of today's session. I'm looking for sell side this morning. It's so currently we're in a we have bearish order flow. So I see this as a retracement. And if you're wondering why is so we took previous month's high. So the next thing that I'll be eyeballing is I want to look for previous month's low. So this is what I'm eyeballing. Um, so we have plenty of lows to look for. Right now we're disrespecting everything on the left side. So just keep in mind this is how I gauge order flow, right? We go from point A to point B. This is point A. Point B to me is going to be down here unless we start changing order flow again. But for now, we're looking bearish. You see this inverse fair value gap. I'm going to use this. I'm going to mark it red because we closed below it. So whenever you want to gauge what side of the market you want to be on, always look at the left side. Okay. So if we disrespect something on the left side, we close below it, then we want to use that, pull it to the side, and then you can use a mitigation block. You can use fair value gaps. You can even use wicks. Just look at what's the closest. Like for now, I want to use this one. So we'll use this BISI, pull it all the way to the right. It'll be an inverse fair value gap, and I want to look what's the low hanging fruit. It's this low here. This low here is low hanging fruit. There's plenty of other sell stops uh, right here. This is another good one. So I mean, if you look, this low here and this low here, these are equal lows, right? And remember, the algo does not care about order blocks. It does not care about fair value gaps. It only cares about highs and lows. So what low is it going to want to target? Well, it wants to target this low. It wants to target this low. And then it'll rebalance, and then it'll target another higher low. So on the higher time frame, this is my external liquidity. This is internal liquidity. Okay, so external liquidity, this high here is internal liquidity. Okay, so I'm looking to target this low as my low hanging fruit. We're gonna wait for a time of interest. Time of interest 9:45. If we see a market structure shift or the smart money reversal happen before then I look at around 9:42 um, to target to find an entry, an execution. So right now, I am looking for this low. If it gets hit, then in I'm not interested in executing anything. Okay, so what are the rules that I look for? I look to see where order flow is going, so I can target my market maker buy or market maker sell model. I need to look for a form of SMT. I need to look for CSD, and it all needs to happen during a time of interest. If it doesn't happen during my time of interest, during that window, then I am not interested. Well, can the move happen still? Yes, the move can still happen outside of the time of interest. If it happens during my time of interest, during that window of time, the probabilities are very, very high for me. So that's why I do it during that time of interest. So for now, we're just going to wait here. But while we wait, because it's only 9:37 at the moment, let's go over mitigation blocks and inverse fair value gaps. So we look at the left side, right? We we take previous month's high. We disrespect. This is CSD right here, right? This is CSD. It's an order block, right? You see how these candles are more bearish than these? That's CSD, okay? There's other forms of CSD. This is for me, this is the early way of detecting CSD, okay? Order blocks are not CSD. CSD is well, I made a video on it. Just if you want, if you're interested, you can look at that. But so these candles here are more bearish than these, right? And then you start looking at like these order blocks, pull them to the side, you start respecting those. Then you have these fair value gaps. I believe I took shorts during these days. I can't remember. I usually post all of my execution videos. And then here, we're respecting all of the SIBIs. And then yesterday, you can pull this. You see how we start closing below it? We closed below it. I did take a short here. I posted the video. I think I took a small partial and I got stopped out. Same with yesterday. London respected this. We dump. And then, what was that? 11 during lunchtime. Look how, remember I told you if we close below a previous week's low or a previous week's high, you can either use that as support or you can use it as resistance as well. So, I mean, just take a look at this low. You see how we close below it, and then you can retrace into it, and then it dumps again. So you can use those as continuation. The reason why you don't start looking immediately for longs is because of this, right? So you want to start looking for longs whenever you see a smart money reversal. Like if we start disrespecting and the order flow changes, like if we would have closed bullish, then you want to start looking for longs, okay, to target like these highs and stuff. Or those are my rules. I normally don't start looking for longs unless all the stars align, like time of interest, SMT, and all that stuff. So they're just always keep in mind that there's a lot of things that come to play before you start looking for reversals and whatnot. So it's what 9:40. We got about 2 more minutes. If the 9 o'clock candle, because this is a 9 o'clock candle, a lot of times what happens is the 9 o'clock candle will stop right before its target, right? And then, actually, let me drink my coffee real quick. So, right now, if it takes this low, then I'm not interested. It's about to take it, right? But so let me just backpedal here. So, a lot of times, what happens is the 9 o'clock candle will do a big move like this, right? And it's going to stop before it hits its liquidity target. So, what happens? This is where the 90-minute cycle. So, write this down, okay? Uh, and then I don't know if I mentioned this in the beginning of the video. I already forgot what I said in the beginning of the video. Um, Everything I say is not financial advice. This is just my own experience that I'm talking about. Okay, so 90-minute cycles. It's the next 90-minute cycle is going to start at 10 o'clock. Okay, and this is where once you start getting familiar with the market maker models, everything is just going to start clicking. Okay, so usually what happens if you're bearish, the 10 o'clock candle will come sweep the 9 o'clock candle. It'll sweep this high, it'll sweep it, and then uh, it'll finish the move. Okay, so like you see how like it it literally just stopped. We're looking for this at sell side, right? So if I'm in my 1 minute time frame, and I'll drop to it here in a little bit. If I'm in my 1 minute time frame, I'm looking for this low. So what I'm setting up the plan, right? Because you want to come in with a plan. You just don't want to go in there and just be pushing the button, right? So we're coming in with a plan. Our plan is to target sell side, which is this low. We're looking for the time of interest, which is at 9:45. We're waiting for some sort of SMT. You can see here we already have SMT, okay? And if you're wondering why, this high here was already taken. This high here was already taken, and it was taken by the Dow. ES and NQ have not taken this high, but we're looking to bounce from here down to here. Let me go ahead and drop down. So we already took that low. ES has not taken the low. All right, so we're going to look for our time of interest, which is 9:45 till 10:15. So this is our window right here, okay? So because this target was already taken, a lot of times what will happen is it's going to keep dropping, right? So if you know the power of three, let's see, 9 o'clock started here, right? So the 9 o'clock candle, it opened here, right? I'm gonna put this as purple. So it opened here. This is a little tiny wick. We have a little tiny wick, and the candle is just dumping, right? So what I'm expecting, because 10 o'clock is about to come up, 10 o'clock starts here, right? It's gonna go up and it's gonna close somewhere over here. So then this will be right now. There is no wick at the bottom of the 9 o'clock candle, but if it does, then you're gonna see something like this that it'll be the wick, right? And normally, what we'll see is the 10 o'clock candle will come, retrace, rebalance somewhere, and then it'll leave the 9 o'clock candle as further sell side. So it will retrace, then you'll see some SMT up here somewhere, and then um, we're still below this, right? So you'll see a retracement. You'll have some form of liquidity sweep up here, some form of SMT during a time of interest. It might not happen during this time of interest. It can happen at 10:45 to 11:15, but that's normally what I look for. Just remember how what I've been showing you, the PXH, PXL, everything works like that. All of the time cycles work like that, okay? So just remember the everything that I'm showing you, these are time cycles, okay? So you want to look at, so PXH is previous, and then whatever session high, previous monthly high, previous weekly high, previous daily high, a previous session high, which is like London, Asia, and then the previous 90-minute cycle highs. Um, Somebody had asked me a question about price cycles. I don't look at price cycles. Um, I normally just stick to time cycles, but price cycles, they work similar. So price cycles are the way that those work is like if your higher time frame could be like 23,000, right? So if you come up and you take your you take your 23,000, and you see a market structure shift on the higher time frame, and then you target at 22,000. So like this could be your 23,000 NQ price. Then you look for a market structure shift. You look for your 22,000 NQ price, or you can um, also do it by 500. So it could be like let's just say it could be 22,500. Your high. Well, then you're gonna look for the 22,000, right? Or you can do your 500. It takes your 500, and then you look at 22,100. Oh, not 100. 400. You can go by different prices, like 100 to 400. I mean 500 to 400. There's just a 100 price difference here. So, but I don't look at it that way. If you zoom out, you can actually. So let's look at the daily here. So if we look at the daily, look at this. Look at this low, at the very low before we were crashing. Look at that. 16,600. 16,600. You see that? That's crazy. We take it. What are we at the highs right now? Look at that. 24,000. So it's like if you look at price, everything goes by cycles, right? So like this high here, what is this high? This high is, just say it's 23,800. Then it retraces, and it retraces down to 22,900. I don't know. I mean, I don't look at price like that. I just stick to time cycles. But this is the daily. These lows here. You see, on the daily, this is CSD on the daily. You see this? This is a bullish candle up here, and this one closed below it. That means we're still looking for sell side. And I'm not saying we can't retrace. We can retrace up here and then go lower. But to me, we're going to this previous month's high. This previous month's high was taken. This is previous month's low. We're at least going down to here. Go back to the hourly. We still have SMTs right now. ES and Q came, took these lows. So we can always, you see, this is sell side, right? So now, if the 10 o'clock candle opens, it can go retrace up here and we can rebalance and then look for some sort of SMT and then look for more shorts. Okay, so if you didn't catch any of this, that's fine because you can just wait for another window, another macro, another window of time to look for another short, right? But what you have to do is just wait, have patience, just wait for this to get retracement up here, and then people are gonna think, oh, we're retracement, yeah, we're changing now, we're gonna shoot longs, right? So then you can get some longs, but I mean, you just don't hold for like home runs. All right, so here, like you'll look for some order blocks here, pull it all the way to the right. We'll use this to rebalance, pull it all the way to the right. And actually, if I look at my 15 minute, this is my 15 minute. I have another screen. So this is my 15-minute order block or breaker on the 15-minute. Pull it all the way to the right. So now what we have, we can look for some sort of retracement, come up here, rebalance, look for some form of SMT, look for a short after you see CSD. So it looks like ES finally took previous week's low. 9 o'clock candle is closing. So right now, you see how that wicked? The body of the candle is right there at the moment. 10 o'clock is coming up. So this is so far, this is the wick on the 9 o'clock candle. Okay. Depending on how bullish this closes, all of this could be the bottom of the wick of the 9 o'clock candle. It's about to close. Gonna have a little tiny wick for 9 o'clock. All right, so this is it closed here, right? So this is the wick on the 9 o'clock candle. All of this. So 10 o'clock opened. What I'm looking, 10 o'clock is more than likely going to come either sweep the 9 o'clock candle and then retrace up, or it's going to come up the way it's doing it now. It opened. So this is where the 10 o'clock candle, I'm going to leave it here. This is how it opened, right? It opened and it can keep retracing. Will probably sweep something or come rebalance here. So these are Asia lows. These are Asia lows, right? So it can always retrace. A 10 o'clock candle can always retrace, tap here, tap another low, rebalance, and then dump, right? So if this gets, because we're bearish, right? I will look for this as sell side. So if we leave this untouched, I'm immediately remove this. Say I don't get confused. So if this left it gets left behind untouched, I see this as um, sell side that sell side liquidity that is just being generated. So that would be a good case scenario here. I would like, and I don't think it'll happen now during this time of interest, but what I would like to see is this retracing, and then around here the 10 o'clock candle then dumping and taking this liquidity. And we might not see it right now, and I'm not going to record it for over an hour or so, but this, so right now I'm expecting this to get disrespected. So if we close above this, so hopefully people are not shorting right now. Um, if this closes bullish, we disrespected this inverse fair value gap and order flow changed. Not fully changed, but just on the higher time frame, it's retracing, right? So in the 1 minute time frame, the order flow is changing to rebalance, then look for a short up here to target this low. And I'm just showing you the way that I look at the market. And you see how this candle here closed bullish more than halfway. This is a sign that it's still wanting to go up. Okay. So another thing that you can do once you see order flow change like that, look at these wicks on the left side. You want to see, yeah, we can retrace again, tap these highs, and then go back up. So we come back, we retrace into this inverse fair value gap, we retrace into it, and then we want it to go back up. This is an order block. I wouldn't I wouldn't be, just to be clear, I wouldn't be looking for longs and I wouldn't be looking for shorts. Because this is like nothing. Um, I just wouldn't be trying to short from right here. The only way I would be looking for shorts, like right here, let's see, we have SMTs now. So we have SMT down here, a previous 90-minute cycle, um, previous 90-minute cycle was taken. So let's see, we have SMTs with Asia. So NQ and ES took Asia low. So this is the huge. Um, we have this huge SMT down here, and then down here we have another tiny SMT. Okay. Now, if we do see during this time of window, if we do see a smart money reversal, which CSD happen during this time of window, I would take a long. And the reason, let me tell you why the reason, okay, because it meets my rules, right? We have a big SMT with Asia lows, and then we're still within a time of interest. We're still within a time of interest, so that's two. So SMT, and then once we create CSD, I will look for a long entry. A previous 90-minute cycle got taken. I can't switch windows, um, but yeah, a previous 90-minute cycle just got taken. This is the 10 o'clock candle. So the 10 o'clock candle is opening lower, right? This is the 9 o'clock candle low. So you see this here is a stop hunt, right? Is a stop hunt. This is the lowest of the 9 o'clock candle. So what is the 10 o'clock candle doing? The 10 o'clock candle came and swept the 9 o'clock candle. Now you want to see we have the SMT. Well, actually, we don't have SMT here because I'm not paying attention. But ES and the Dow also have this same move, but we still have SMT with Asia. So the 10 o'clock candle came. It swept the 9 o'clock candle. If you see SMT CSD during this time of interest, smart money reversal, then I would be comfortable with looking for longs just because I would be following my rules and my protocol. But if it keeps dumping the way it's doing it, I don't see a move. Okay. And even though this here could have worked out as a short for some people, it to me I wouldn't be looking for shorts here. Okay. Because the probabilities to me are higher of it retracing and then looking for a short up here than to shorting from here. And just so that nobody's confused, I am bearish and I was looking for shorts, but I don't see a shorting opportunity. We have a real tiny SMT right here. Right here. ES and the Dow Jones swept this candle low, and NQ did not. Okay. Previous 90-minute cycle got swept. This is the order block. All right. We need to close bullish above that. And there's still SMT because now NQ came and swept it. But so NQ swept that now, right here. NQ swept it, but the YM did not. The YM is actually pretty bullish now. ES and Dow Jones did not sweep these, but NQ did. And just keep in mind that we have a huge SMT. uh, ES and NQ swept Asia lows, and Dow Jones have not. I'm probably not going to push the button either way, just because we're already at the end of the macro. Let's look. So this could be possibly CSD here, because this is the bearish candle. This one closed more bullish than this one. This is a rejection block here. This wick. And then something that you can do is here to be very, very safe. One, we want to close above this order block here, right? We close above this order block, then if you want to enter here, then you can. If we close above, if we start disrespecting like this inverse fair value gap, that's a good entry. Another one is above here. This is a breaker. If we close above that, then you can take longs. And I would not shoot for like all the way up here. I would just look for like here. I would probably take partials. Like if you close above here, you can have longs and like take partials at this low. And then if you want to have like runners, then you can target up here. But doesn't look like we're gonna have a move. Hopefully you learned something from this. I'm gonna keep doing some reviews like this. A lot of the things that we went over today. Let me erase these things here. Is we looked at price cycles, and then we looked at mitigation blocks, looking at inverse fair value gaps, looking at the left side of the curve. Looking at the left side of the curve really does help out a lot because it helps you gauge. the order flow. As long as you understand the higher time frame. So against previous month's high, I would start looking for previous month's low, which is down here. Um, so yeah, that's looking at order flow, looking at mitigation blocks, inverse fair value gaps, targeting lows like this previous day low down here. That's a good low hanging fruit to target. So let's put this as sell side. So this low here, that's a good low. And look, we're actually about to take it. So cool. Don't forget to like in the comments if you want me to go over some other stuff. Leave them in the comments, and y'all have a good one.